Good morning. Welcome to today's live Forex trading strategy session. My name is Wayne McDonald, Chief Currency Market Strategist for TradersWay.com. I'm here to teach you how to trade your way with Traders Way with Traders Wayne. Love it. Australia cut interest rates. Okay, that's a bit of a surprise, but the fact that the Euro's weak or the Aussie's weak, yeah, look, it's terrible, right? Let's do a full history course. When the Aussie dollar was worth 92, the Reserve Bank of Australia came out and said it was only worth 85. So it dropped from 92 to 85. Then it kind of gained some strength for a while. The Reserve Bank of Australia didn't like that. They came out and said, no. It's worth 75. So guess what? We're at 76. I mean, of course. The people in charge of setting the value of the currency told us clearly, this flat out. It's a fact. Well, now we're kind of there. They did have to cut interest rates again because we've been stalled out for a while. So they had to cut interest rates from an all-time low to a new all-time low. So yeah, it's a bit of a surprise they cut, but they didn't have too many other choices. The facts were out there. Commodity prices are down. Inflation levels are down. So on and so forth. The job market's not as strong as it used to be. Real estate and other long-term durable good assets are coming down. Time to devalue the currency like everybody else. So they did it. It's not that complicated. What else is going on in the world? Well, let's go through all the charts. How about all the dollar pairs? How about all the yen pairs? How about commodities and metals and energies and stock indices? You want to go through them all technically? Yeah, me too. Let's do it. Now, I also want to remind you that trading and investing is risky business, especially when you're leveraged. It's not appropriate for everyone. Your past performance, good or bad, never predicts future results and never risk money you cannot afford to lose. All right. Do you want me to start with Aussie? Yeah, okay, we'll do it. People wanted to talk about it, so let's talk about it. I was mentoring a trader yesterday. Price was stabilizing on Aussie dollar. We're about an hour away from the news, and we set it up. Shouldn't be that complicated, but let's go back to what we've been doing for several weeks now. You have the macro move here. We have planned with two scenarios, right? You can see two gray areas. The first one was to have it roll over between the 382 and 50%. And if so, it would come down and hit a particular target. Or as you can see, there was a plan B, a contingency plan for roll over here. And of course, even really up here, a third one, if the macro move did a 786 Fibonacci retracement, there was a plausibility up in here as well. So we have it planned out, which says, okay, I'm a bear. Why? Once again, Governor Stevens and the Reserve Bank of Australia told us. I mean, that's it. What more do you need? There's the fundamental analysis. The Reserve Bank of Australia told us that it was worth 75. Okay, so when we're up here at 83, I mean, I don't know. So I have three plans here. Sell it here, sell it here, or sell it here. So, you know, it rolled over and double top, took a while. You know, it's a long-term trade. This is a, hourly chart, but, it took about, 3 days to roll this thing over and down, down, down. Okay, now you can zoom in and kind of do the same thing here. Down, up, nice little fib retracement, right? And then this one here, down, up, nice little fib retracement. You see that? There's two things going on there. Fractal geometry, right? That's the various time frames, waves within waves within waves, but the price action too, right? Right, you could see it even on a smaller fractal here, right? There's support. We broke support, came back. This time support's resistance. Okay. So you can see that. Sometimes it's perfect, sometimes it's not quite. But anyways, break support, comes back, retest it. Now it's resistance, right? Retest this support, breaks, come back. This time it's resistance, break support. And you just keep doing this until it stops making a series of lower highs and lower lows. If suddenly it made a higher high, higher low, that's called a change in trend. But we don't have anything like that. This is just on all time frames. Even on a daily chart, a 4-hour chart, a 1-hour chart, 15-minute chart. All this stuff makes a ton of sense, guys. And then on top of that, the person in charge of the value of the Aussie dollar has already told us, in terms of US dollars, it's worth 75. So up here, when it's 82, 83, 84, 85, pick your lines. Look for reverse patterns. Take a shot, drop a stop, manage a risk, let it run. This was very, very clearly explained and set up on all kinds of things. But you're saying, well, Wayne, maybe that's just a one-off. Actually, if you go to this daily chart, Governor Stevens started this way up here. Okay. That's the move from the Aussie being strong to Aussie being a little bit weaker, right? And the second one here, though, is when the RBA and Governor Stevens actually said, no, the Aussie dollar's not worth that. Oh, wait, no, it's this one, sorry. I think it's this one. There you go. Okay? They're like, no, it's not worth 92 or 93, it's worth 85. Okay? That's as transparent as you possibly can get. And ever since then, we've had a fundamental trend, right? Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay. Do you think the world is a better place economically now than a year ago? No, probably not. In a year from now? Okay, that's debatable, right? What's changed now versus just a few months ago? Well, quantitative easing. Will quantitative easing have a positive global macroeconomic effect within a year? Well, when we talked about microeconomics yesterday, we did talk about it takes 6 months to a year to start to see the money flowing through the European economy based on quantitative easing, and maybe a year or two for it to trickle down through the full economy. When does it hit globally? A year? Yeah, maybe. And that's where things might change, right? Let's see, we start seeing positive data out of Europe, money starting to trickle down to the average Joe, spending increases, inventories fall, industrial production and capacity utilization goes up, orders for products from overseas start to go up, factories start spinning, industrial production and capacity utilization in China goes up. They're going to start needing things like coal and iron ore and oil. So oil prices go up, right? Coal, not only for firing up electrical plants to power the factories, but also, you have to take iron ore, melt that down, and add a little charcoal to it. Now you got some steel. So where are they going to get all that coal? Where are they going to get that iron ore? Well, if they've depleted their supplies, and then they have to call up Australia and they say, hey, Australia, give us some iron ore and coal, and boom, commodity prices are going up. After several months of orders flowing into Australia, the Australian economy starts stabilizing, and job growth picks up, commodity prices go up, so profits start going up at companies, and the Australian stock market starts going up. And okay, is that going to be next week? Literally, it could be a year or two before we see some of that. I mean, we don't really know. And of course, your alpha, your ability to outsmart the market, is going to be your capability and your correctness on picking times, not only when that's going to happen, but most investors, not investors, most traders try to front run that data and get in before everybody else. So for example, if you know when industrial production and capacity utilization of Chinese factories go up before everybody else, you could be in the market a month or two before, right? Because then you could say, well, if I can track Chinese factories, that might be a canary in the coal mine as far as Europe's quantitative easing having positive effect. Inventories drop down there, they start placing new orders, therefore factories have to get going. But what if you knew the factories were getting those new orders and they were retooling and stuff and preparing the factory before everybody else, before it was reported in the news? So you might know people at factories throughout China. I read about a guy that tracked suet prices. Suet is is rendered fat, primarily used not for feeding birds, primarily used for producing soap, in particular industrial soap for cleaning factories. And so he would track supply and demand of suet that got used for soap. Because if you got a new factory, new orders for your factory, and you had to retool it, prepare it, and clean it and stuff, your demand for soap would go up before the actual factories got retooled, before the factories start producing things, before the factory numbers go to the government, and the government reports it, and the government finally says, hey, guess what? Factory utilization is going up. And now everybody knows that data. They knew 3 or 4 months before it was even reported because they were tracking that. So, hey, that's that person's alpha, their ability to outsmart the market. So it all depends on when you get on this. But all this is pretty straightforward, and I've explained it, I don't know, 1,000 times, right? So it's working out. Now that we're down near 75, what are people going to do? Start selling it. All right, a little late, my friend. But so just be careful, right? Where were you when we were at 83 or 93? So anyways, this trend has been going on a couple of years now. This is the other thing I was saying. Okay, so they cut interest rates. Yeah, they need the value of the Aussie dollar to go down more, and it was stabilizing, around what would you say, kind of around 79 and 80. Just one more discussion on this. Let's go up to an hourly chart. It was just recent that we were at 80. I think it was last week. And I planned this out with you. We were down here, retrace back to 80 and sell it. 80 being a psych level, an obvious, unbelievable psych level. We planned it up. We were down, price was rising, and one of my key arguments was the fact that Governor Stevens at the Reserve Bank of Australia told us it's worth 75. So we made a lower low, retrace back to resistance, drop it like it's hot. Well, 300 pips ago. Okay, that's called a swing trade. Oh, and let's do let's bust this out. Let's go back to the swing trade. Let's do it on a 4-hour. I guess it's a little too much. Where's the 80? Well, I guess, let's see, 4 hours a little too much. Well, okay, so here it is here, right? This line here. That's the test of 80 we're talking about. Here's the lower low previous to that. Okay? It's a 382 Fibonacci retracement. Boom. 382 predicts a 1618. Am I right? Or am I making that up? A 382 Fibonacci retracement predicts a 1618. 161.8% Fibonacci extension. How many people would agree with that? Say aye. Okay. Where's our bottom today, guys? Can you see that? From the top of this move, which we had measured last week based on our swing trade, that 382 is a nice top. Look at the bottom. 161.8%. Now try to convince me that was a random walk. That even with the Reserve Bank of Australia surprising the world, slashing interest rates to an all-time low, convince me that that was a random walk where it went exactly 161.8% of the swing move and stopped. I don't think you're going to be successful there. I'm convinced, man. I drank the Kool-Aid a long time ago. Yeah, interesting coincidence. Interesting. So I'm just following this up, guys. That was given to you on a silver platter. All right, so let's go around the other way. Let's just go through the world here. Go around the world. Okay. Now, do you remember my concern? I think I briefly talked about it yesterday, and I think I briefly talked about it last week. My concern with this pair this week is similar to the Euro Swiss franc. Remember that debacle? Everybody was long, nobody was short, right? Now, we've been shorting Euro USD for a long time, clean fundamentally, totally made sense. Now we're going into FOMC week, and the event risk is, or not FOMC week, sorry, non-farm payrolls week. So Friday's jobs report in the United States is the major event risk of the week. Who knows what happens there, right? So it feels to me there's a lot of profit taking on the Euro USD short, and people are taking a break for now. Okay? So I'm a little cautious on this one. Even though nothing's changed for me fundamentally, lots of things have changed technically. When I look at that, am I thinking trend? Okay? When I'm looking at this is a 15-minute chart. Is that trending? Not really, no. Someone might even say up, and there, if you argued this way, I say, all right, I agree with you. I'm just not going to trade it. But whatever. Whatever, my friend. Just kind of not really interested. Okay? We've played that game. I'm tired. So, yeah, let the fundies come out. Maybe let's regroup and sell it next week. I'm okay with that. There's always something to do, right? So there's my thought there. Let's do pig dog. Okay, is it trending up or down? Okay, when it gets near the 21, sell it. 21's in control. I'm bearish. I'm aggressive. There's nothing on the planet that would make me want to buy this thing. Okay, 21.55. That's it. By the way, I just want to see who's paying attention. Last week I did a very detailed overview of the MACD, and I asked people, if I gave you a chart with nothing but price action on it, would you be able to draw the MACD just by looking at it? Could you figure out the math going on with the moving average convergence divergence indicator and actually draw the indicator by hand? Almost nobody said yes, but how about now? How many people could give it a pretty good shot now that they understand what the indicator is actually telling them, what the algorithm is actually calculating and displaying with funny little colors? Then bravo, guys. Bravo. Knowledge is power. I hope it brings a little more confidence than, praying that the MACD is going to make you money and pay for your mortgage and put your kids through college. Well, the MACD is just an algorithm. It doesn't care about you. So you better understand that what it's telling you, right? So anyways, congratulations. Yeah, it is on YouTube, Kareem. YouTube.com/C, as in channel, /Traders Way. So anyways, guys, the 21.55 represent the market. The market is very bearish. Price has been below the 21, and in this case, I consider the 21 in charge. So as long as that happens, I'm a bear, and there's nothing that would make me bullish. So I'm only looking to sell high. I'm only looking to sell retracements. Key things I'm typically looking for are where is price in relation to the 5 EMA, and where's price in relation to the 21 EMA. Nothing else up here even exists. Who cares? Okay. To me, it looks like the 5's not in control, but the 21's in control. So lots of things that I could do is I could take, this is essentially last week's low to last week's high. You could see yesterday we had a 50% retracement. And hopefully, if trend continues, we will be moving down to the next level. Okay? If it doesn't, then it will retest the 21 and maybe break it. And then I back out and I sell off the 55. I'll probably do the bigger fractal, so I'll measure the swing this way with Fibonacci, probably here. Look for confluence up in here. But because the 55 is in control, I would assume it comes down, essentially double bottoms and reverses. That hasn't happened yet, so I don't care. If it hasn't happened yet, then I don't worry about it. Okay? 21's in control. I'm a bear. I'm looking to sell. I'm looking to sell retracements. I'm looking to sell rallies. Looking to sell at resistance when it's overbought and starting to fall. Okay? But that's not now, is it? All right. Move on to the next. Kiwi dollar. Okay. Bullish or bearish? Okay. Who's in control, 21 or 55? Okay. Look it. Down, 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 up to the 21, sell. Down, 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 up to the 21, sell. Down, 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 up to the 21, sell. Down, 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 up to the 21, sell. Oh, wait. That's not, that'll take another 10 days or so. Oh, okay. Well, I guess I know what I'm doing Valentine's Day. Selling the Kiwi dollar. I'm in love with selling the Kiwi dollar. Give me some big pips. Right? Oscillators seem nice. It looks like it could continue mission. So if you're on that's a 4-hour fractal. Let's drop this into a 1 hour. Okay, you've made a decision. You want to sell, right? Good. Where do you want to sell? This could be resistance. This could be resistance. Are there any psych levels in here? 7250. That's it. So how about like, how's that smell? How about I let this get overbought and fall? Easy, right? Kind of makes you wonder why he did sell the weekly central pivot point. Unless you thought the Reserve Bank of Australia, which is New Zealand's cousin, unless you thought the Reserve Bank of Australia was going to reverse their central bank policy that they've had for over 2 years and actually throw mud on their own face by saying, we've totally made a mistake. The Aussie dollar is not worth 75. It's worth 90. We totally screwed up. Unless you thought they were going to come out and say, you know what? Commodity prices have stabilized and are going up, and the future outlook for orders has increased dramatically. So we're going to have to keep interest rates steady. In fact, maybe, just maybe, by the end of the year, we'll raise interest rates. Did you honestly think all that was going to happen? You think commodity prices are going up? You think demand for iron ore and coal is going to go up over the next 12 months? I think it was JP Morgan that said iron ore and coal will be down 40%. The demand for iron ore and coal down 40% this year in 2015. Iron ore and coal demand will be down 40%. Did you know those are the two largest exports from the nation of Australia? Yeah, so, this is the kiwi. They're somewhat related. Kiwi is not only a cousin, but it's also a commodity play. So look, I mean, did you think this was going up? Just you ask yourself, what would make it go up? The numbers are public, right? The numbers are public. You can get industrial production capacity utilization numbers. You can get job growth and unemployment data. You can get inflation data. On the consumer side, you can get inflation data on the producer side. You could just Google analyst reports for demand for commodities. Like, you should just know that. Demand for iron ore and coal are down. You can track bond fund flows. You can track, I mean, all of this information is free and available, right? So, this is just something that you should be doing as a currency trader. So was there any evidence that, the Reserve Bank of Australia would just completely stop and reverse their 2-year central banking policy because economic data has changed so radically, so quickly? The answer is no, and continue mission. You should be selling rallies, right? Unless you're a bull, but you better have some evidence for that, right? So anyways, so there's the plan, Stan. If I'm still a bear, then sell it. Somewhere, that zone, right? Oops. So I like to draw on my charts so that I can remember, right? So it seems like basically that's the first rural area there. There might be a little mini one where we are now, but what's wrong with the mini one here? Oh, come on, I have to do it a third time. Come on, Bubba. There you go. We're right here right now. What's the issue with this one? Well, Kareem, there was no, you wouldn't know Australia was going to cut interest rates. Okay, all else being equal, the Aussies should at some point still be weaker than 80. Okay, so anyways, and the Reserve Bank of Australia cutting interest rates only aid. Okay. All right, yeah, Rick D says the issue is the stochastic oscillator, and what it's telling us is price over the last few candles it is making higher highs. Another way of looking at it is the 5/8 is moving up. Okay, so where's it going to go? It's going to go up, tickle the 21. So price is going to do this. This is going to go up. Cool. Well, guess what? I'd like to be short kind of there. Okay. It can go a little higher. I'm cool with that as long as it drops. Okay, so Kiwi. Fine. What's the next one? CAD. Okay. Been a long time coming. All right. So price is no longer, relative to these candles here, no longer making lower lows. Are they making higher highs relative to the previous candles? No, but they're thinking about it. Okay. So it comes down to whether you think it's going to trend its way back up. Okay. If you're a bull, you should be thinking about it. You should also notice that that was a significant decline. Okay. I'd be a little worried of the double top because the 55 is lagging, isn't it? So in a few days, if price is up here, the 55 will move up slightly across the board, won't it? It's lagging. Market's still rising. And what it'll do is the 55 will kind of do this now. It's not touching price now, but it will be in 3 days. And that means the 55 is in control, which means we're vulnerable to a double top. So it does this. All right. Now, one of the reasons it might be doing that is that people are just getting out of the dollar, the US dollar, on non-farm payrolls week. Everyone's taking profit, avoiding the risk, and maybe we get back to it next week. Don't really know. Okay. So play it smart. USD yen. Okay, so here we are back at 16. Let's go into this. Okay, can you see the range we were in? Okay. Okay, so what's happened here? Okay, perfect touch, perfect touch, perfect touch, perfect touch, perfect touch, perfect touch, right? Higher high, lower high, lower high, lower high, lower high. Okay, and something over here happens. Breakout, pullback, okay, and it's kind of trying to do this right now. So, bring this over, pay attention. Notice what it's done as well. Break back to the 21, down, back to the 21. Okay, it may just squeeze it, pop it back to the 21. Okay. I would say maybe back into here. I actually want this to go up, as you know, but I mean, that's a fact, Jack. What you're looking at, that's a fact. Lower low, so you follow up a lower low with a higher high. It's just technical analysis. Okay. And this should produce one of these. Okay, is there anything else going on that we could use in our technical analysis? Well, what's the top of the week? Well, so far, it looks like it's a weekly central. So that predicts S2. So we're on our way to 1650. Next. Let's do, what? Before we do the ends, let's do the commodities. Dollars weak, yo. Looking around the charts. All right. Okay, oil stabilized. Okay. Do you guys remember our targets? The last time it was at 50. We had a short trade plan. We had two targets. We had 44 and we had 42.50. Can anybody confirm? There it is. It was this move here. So we've made a couple of trips here where we keep trying. And the bottom, what is the actual? I don't follow this every single day. I just watch it for direction on commodity prices primarily. Well, 44. So we never really got any lower than the first target. All right. But now it's stopped and reversed, right? Should we care about this? Yeah, I think it's important. So you got to do this, okay? And then you got to take a look at the higher fractal. And we're still there. So a small retracement now would lead us to $63. Okay. Is it going to go straight up? No, it's going to go up, down, up, down, up, down. Okay. It's going to go like this. Higher high, higher low, higher high, higher low, higher high, higher, oh, oh, oh. Okay. But you know what? We had this planned out 3 weeks ago. Cool. Continue mission. Next. Gold. Okay. Nothing's changed, has it? Sell here, sell here, sell here. Let's zoom in a little bit. Okay. Seems pretty straightforward to me. Up into 13, down, double top at 1300, lower low, lower high, lower low, lower high. Should continue, right? Stokes kicker, lower low, lower high, lower low, whatever. Until it changes. Look, if it suddenly, makes a higher high, higher low, higher high, something's changed. But, again, selling at 1300, I guess it went a little higher, right? Still. Not really. Yeah, you know what? I mean, yeah, come on. Right? Cyclo, double top, then lower low, lower high, lower low. Just very, 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 very basic level of technical analysis, just price action wise. And the psychological level, really not complicated. The only reason it worked is because it's an obvious psychological level. So pretty straightforward there. Stock market. This one's been scary, huh? This gray zone is the zone where I just don't want to see it go any lower because it's so far down and so many people would be hurt by it that I don't even want to think of it. Well, look at this. Look. I mean, we even broke it for like an hour and then just, so clearly someone else is thinking the same thing. Are we out of the zone? Yeah, could be, huh? Up, down, up, down, up, down, up, down, up. Okay, I don't know. So let's change a fractal. Let's go to a 4 hour. And what I have set up, and the funny thing is I set it up 2 weeks ago. Just play the range for now. Okay. So there's that, and then the top of the range is in here. So I wouldn't expect much more than that right now, and just let it break. Just trade it like you're range bound. How do you trade range bound, guys? The most important thing you need more than anything else is support and resistance. And then when you're at support or resistance, you look for the market to be oversold if you're at support, or overbought you're at resistance. So this is a double bottom at support going back months, couple of months, with a little bit of stochastic divergence. Okay, so you got the double bottom, bingo. Like I said, this support, this gray zone, is really key, unbelievable support. And if it got any lower than that, stock market crashes, crash and burn, baby. But the thing is, many more participants make profits on the way up than on the way down. So when you're at key levels like that, it tends to find support. But I can't argue that it wasn't scary. But it is what it is. So maybe on a smaller level, you're starting to buy dips and taking it. And, you know, if the prevailing wind is successful, you know, it will make a higher high. Maybe not this week, but, you know, a lot of market participants in the stock market are investors. They're institutions, so on and so forth, right? So they're buying it at a retest of 2,000, the S&P 500, right? And they're going to sit on it for what's the average hold now? Is it 5 years or 2.5 years? It used to be like very significant, right? But still, so someone might be in it for the next 3 years. And you're worried about the next. Well, Cream, I'm not saying it is. I'm saying if it went below this, there's no more support for a very long time. That's it. So therefore, this really had to hold because I don't want to see it go down any farther, nor does anybody else. And when the vast majority of market participants make money if it goes up, they're probably going to support that level, and they did. Whatever. Okay. Fear and okay, whatever. And okay, we'll just do FTSE a little bit. Okay, this was, we were marking up a potential head and shoulders reversal pattern. And it never really broke the neckline. It got close a couple of times, huh? Never really got through here, which is fine by me. Let's go to a higher fractal. Okay, lot going on here, right? I love marking these charts up because you never know, right? You want to mark them up so if price one day hits that and you're on a small time frame, you're like, what's that gray area? And you've left yourself notes, a little momentum. So see, I was okay. If it did head and shoulders and come down here, it's really a lovely support anyway. So, okay, either way. Again, I think the UK is going to benefit from European QE. Dollar tanking. Very nice. Oh, some yens. Let's go through some yens. I hope you don't mind that I continue. Is that all right? Do you mind if I go through some yens? I know the session's gone on quite a bit already. I apologize for taking so much of your time. but I'm trying to squeeze a lot of information in here in a very short order. And sometimes the tangents are good, so I go with it. So anyways, Aussie yen. I think it's too premature to buy it, even if the yen gets weak. Okay, but that's a short zone for me. You notice the 55 on the 15-minute is in control. That suggests the inability to make a lower low, possibly a double top. So I'm thinking maybe like that. Okay. Does that make sense? So the resistance is still here. How are we going to get that far up? Do you think we're just going to blow through the 55? Possibly, right? I mean, it could just do this. But let's play 55 like it's going to hold. If that does hold, then it predicts a double bottom. So then it double bottoms. But this was such a big pullback that there's clearly bulls in the market. So we'd take it up to the next level, and they'll wimp out here. And the real bears will say, I'm going to sell that at 90 like there's no tomorrow, and down like a ton of bricks. Next. Okay. Let's go to a 4-hour fractal. This is kitty cat. A little less obvious, right? Seems like we tested the 21 and it's failed. But there's still some hope here, right? Kind of feels like it's going to lie to us and head up to the 55, which means it'll do this. Where's the resistance? You know, it's not that obvious. It's not as hardcore as some of them, right? So let's back up a little bit. Is it time for a bigger retracement? Nah, this is a mess. This is a total mess. All right, so let's get out of this. That's old analysis. Let's get rid of that. Let's do this. Boom, 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 boom. Okay, that I can believe in. All right, so let's go to a 15-minute fractal. And you got this high, you got this area, the other low. So yeah, if you wanted to short, I wouldn't do it now because of the oscillator. So it'd be very interesting to see what happens here. If this goes up to 94, I might look for a sell. Okay, because it's still technically resistance. It is technically a lower low. So this comes back, retests, drop it, but you can't do it now because the oscillator's out of position. So it comes up here and wimps out. Where would it wimp out? Where's the psych level? The psych level is 94. Boom, sell it near 94. Could be 93.80 to 94.20. Next. Euro. Okay. Does that look like a good trend? Nah. Still have to mark it up. Okay. Still want to sell it here. It's my job. Fallback position. Well, here. Okay, I'm worried that it's not making lower lows. It's had plenty of chances to fall. It hasn't been doing it, but again, kind of feels like people are getting out of the Euro USD short going into non-farm payrolls. So this moved sideways for a while. So yeah, you know what? I wouldn't be shocked if it did one of these and then one of these. Okay? Not much more to say. 55 is in control, but the angle and separation between the 21 and 55 is diminished. It should have already fallen, so it hasn't, so whatever. Another way of looking at it is it trending? No, not here. So you can range bound trade this on a smaller time frame, right? What are the key ingredients? It has to be at support. Don't even look at the oscillator. Okay, look at the support or the resistance. If you're on key, hardcore support resistance, not little mini stuff in the middle here, not that nonsense, the extreme stuff. You're looking to buy and sell at market extremes. If you're at hardcore support or hardcore resistance, then you look to the oscillator for timing. Okay, that was a buy. Okay, that was a buy. Even though they didn't produce, I don't care about that. Okay, it's the risk that I care about. You don't want to be in the market here. You got to be in at support. Okay, not here, support. Closer to the support, the better. Not 15 minutes late, not 20 minutes late, because you're looking for 19 different levels of confirmation. There is no confirmation. The market's moving sideways. Buy at support. Sell at resistance. Drop a stop, take a walk. Pound yen, otherwise known as the beast, otherwise known as the widowmaker. Okay, 4-hour fractal. Where's the trend? Trend is down. Trend is exhausted. We're much more oversold than overbought. Much more closer to support than resistance. Let's go back out. Let's go to the daily and see what's going on here. Yeah. All right, let's get rid of the top one. Move the bottom one. Okay. Drop in. Yeah, I suppose I'd rather be buying than selling, but if I want to, if I'm a bear on the pound, I don't need to buy this, but I wouldn't be selling here. You see what I mean? So if I was a bear on the pound, then I'd want the pound yen to fall, so I would look for resistance. Okay? If you're trying to catch a carry trade, then you're at support, it's triple bottomed, you got a 4-hour Stokes cycle, and it's a roll reversal based on the daily chart. Make a decision, go long, drop a stop, take a walk. Okay, one more. Kiwi, 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 can't you see? Sometimes your pips just hypnotize me. Okay, let's go to the 4-hour fractal. Ooh, might be a roll reversal. Drop into the 1-hour fractal. Okay, price action wise, I think this is interesting. Right? So like you broke that support, it became resistance, broke that support, right? Kind of came resistance, right? So is that what's going on in here? Well, it says you got to wait probably till the New York close or Asia open, but selling off the 21 is a possibility here. Let me zoom in. Okay. You could look to sell here. Oscillator's not quite ready, so what you're going to do is cut the corner, drop into the 15. Okay, back out, give yourself. Yeah, 15 minutes is higher too, doesn't it? Broke the 55. We're on our way to the 200. All right, so look, if you wanted to sell this, they just say, the charts just say not now. I wouldn't necessarily buy it, but I think the timing of selling it has too much risk in it for me for now. Maybe later, maybe tomorrow. Okay, that was a lot. Oh, sorry it took so long. That was a full-on hour of technical analysis. I know we did cover the RBA decision in a fair amount of detail, so I guess that's where I went over. So thank you for your loyalty. Thank you for being with me every day. I'll be here tomorrow as well. We can do shorter term time frame stuff. Remember, tomorrow there's the ADP scalp. Tomorrow you should be trading CAD because of oil inventories. So, you know, it should be a good day tomorrow. So again, thank you for your loyalty. It'd be nice if you paid it back by opening an account at TradeWay. They're investing into your successful future up front by making these events available to you. So fund a live account and hopefully trade successfully for weeks, months, and years to come with tradersway.com. Peace on earth. May the pips be with you. May your profits be above average. This video will be made available at youtube.com/c/tradersway and also on the Traders Way website. Cheers.